All right, everyone, welcome to Forward Focus. It is already May 24th, and we are heading into Memorial Day weekend. So, markets are going to be a little wonky here over the weekend heading into next week. Most of the exchanges and everything are closed on Monday. So, I will actually email out some trading hours information for you guys here this weekend so that you know all of the schedule around the world with the markets this coming weekend. Now that's a little tricky, especially for new folks. We've got a pretty exciting week of trading under our belt so far. It has been a lot of back and forth action. Some of it's been pretty slow. One of the things that is interesting, I know this happened to some of you guys yesterday. I was kind of watching it half here, half not here, thanks to the virus. Um, but a lot of times the market gets really choppy and really slow, and then everybody's like, oh, I'm just gonna leave. You get into like that washing machine mode in the market where it's going back and forth and not really any commitment. And as soon as I started seeing everybody saying, oh, I'm going to be calling it a day, that's like kind of a heads up that you shouldn't, because that's usually right before things start to take off. We are going to take a look at that here. I'm going to flip on over to our charts. Have I had a profitable week? Yeah, despite some mistakes made thanks to my lovely virus, which had me not thinking quite right on Monday, I still managed to come out ahead. Actually, I caught that move last yesterday afternoon, so that was a really good one coming out of that. I can show you guys that chart too as we get started here. Let me pull that trade up for you. It's kind of cool how the market starts out so slow and messy and then just will wham take off. So we'll look at that here just quick as just like an educational bit for you before we get going. Let's see. I'm going to pull up the NASDAQ quick because I need you to see the larger extension here. So here's what we had going on yesterday. And what you'll notice is that we had, if you look at just this main impulse move and then the continuation, yesterday we hit support initially at that 76.4. That's where the momentum was really about the same strength. And you'll notice that over here, momentum kind of started to shift a bit. So that would usually start at this point, and it took a little bit longer yesterday before it pushed into that 100%, but that's what caught my attention going into yesterday afternoon was the fact that we were hitting that 100% extension finally from that impulse move. And even though it didn't maintain quite the same momentum, it usually is going to be a really strong support level. And what was happening at the same time here in the S&P 500 and the Dow is that we were having a to-be form. You can see it here on the 8,000 tick chart. So started out with a quick drop, then a slower drop, then a slower drop, and then here's the to-be. So the NASDAQ, although I traded the NASDAQ, it was really the S&P 500 that I was watching. And I was watching for that two-wave move here into that slightly lower low at the same time the NASDAQ was hitting the 100% extension. And let me show you guys the entry because this is where things are really tricky. This is where you're going into actually advanced trading. And I know a lot of you guys couldn't see this because it is so fast you can see here's the 2B, and here's what the NASDAQ was doing. So here's the 2B that was forming on the S&P 500, and then here's what the NASDAQ was doing at the same time. It was forming a triangle. So you don't even see a clear-cut pattern in the NASDAQ. I'll make this even bigger. In fact, it was kind of, a little bit weak here, kind of had this little false breakdown. And then we had the trigger on the trade. I think I was talking about it in the main channel. So let me show you. Here's what my entry was like on the NQ. So I didn't have the best entry on this, but you'll notice there's no clear pattern on the NQ. This is where the channel was breaking on the ES on the 2B right here. And here's what I was watching on the smaller time frame. So this goes into advanced trade management because this is a do or die point right here on the breakdown in the NASDAQ. So when you're looking at a NASDAQ or any move in the market like this, where you get your 2 waves down, 2 waves up, tries to break down, little tiny break, it doesn't follow through immediately. The confirmation would be for this to go into a little base and immediately go. Sometimes it will pop back up into the range and then go with a 1, 2, 3, but it has to immediately, let me erase this, immediately follow through here. So because this pulled back up into the range, this needed to hold that range perfectly and immediately turn back down and go into 1, 2, 3. So when that popped back up, that says, you know what? The bears are done. It's failed. This is a 50 tick chart on the MNQ, the micro NQ. That tells you how fast that decision has to be made. So this is something that repeats over time, but this is very much an advanced strategy. So if you can't get this, you don't see this, it's really confusing, don't worry, because it takes a long time to make this decision really quick on a time frame like this. But you can take this and print it out, and you're going to see this repeated over and over again. And I saw an example of this move up and then the continuation here earlier today, and I'm trying to think of what market that was in. If I come across it while we're doing our forward focus, I'll show you guys so that you can see an example of when it actually does go and confirms the move. So if you were short, for example, some people might have been trapped short on the downside here. This was a measured move here, but if you were short, this is a situation where you can actually go and move your stop to a channel break on the upside here and actually have a tighter stop, because that tells you it's totally turned around. So that's actually part of the reason my entries weren't as great on this one as they'll often be, because what I did was I used that channel break there as an initial entry, built into it when this channel broke here, and then built in finally when this pulled back and it was reacting off of the support. So it's kind of starting to gain steam here. And that's what held me in the trade. And I know this is a difficult pattern for you guys to see and understand, but realize it is one that repeats. So over time, as you gain more experience, it's going to become clearer to you. What you can focus on, though, is the cleaner setup that was in the ES. So in something like this, you can go and use just this pure channel break like that as your entry trigger. True, you end up with a wider stop, but it's still a really strong strategy. This is your first target level here, and it went to do a 1, 2, 3, and then up into a slightly higher high. So it ended up pulling up into here. So you still have really good return compared to what you're risking. It's just not quite as micromanaged as you will sometimes see me do on the much smaller scale. And that is actually perfectly great for those of you that are just trying to gain consistency and really learn the strategies. Learn the strategies and these core entry triggers first, and then worry about learning how to build into a position at an earlier level when it's a two-wave measured move. If you just try to build into those all the time, there's a lot of times you're going to get flushed out. You'll build in wrong, it'll fall. You can't make those decisions as fast as you will be able to as you gain experience. I mean, it took me probably about half a dozen years or more to get to the point where I can build into the levels really confidently and know which ones are going to have the highest probability of working, how to manage them if they're not working, so that I don't get in the like really extreme stops. Do I use a market order or a limit? I'm usually using a limit order when I'm building into positions. Um, I will use market if touched orders if it has a for my stop levels. So what I found on the micro E-minis is that I will get flushed more on a market if touched order on the micros than I will on the regular E-minis. So that is a difference that I have noticed. I haven't tried it on the micro Dow or the micro Russell 2K yet because those are even thinner. Sorry guys, my voice is a little hoarse here. Hopefully it holds up throughout the session. But yeah, it is fast. So Pat, when you have limit orders, you can select, I do the, let me close this here. I use chart trading. And this is something that came up the other day because a lot of people, they might be trading for years and not really realize, hey, why would you choose buy ask, buy bid versus like buy market? And the reason is you want to limit what your slippage is on a trade. So you can use, hold on just a second, you guys. I'm going to grab a drink quick. Okay, sorry about that. Okay, so you can use buy ask. Let's see, I'm going to need to write this on here. So let's say, well, here, you can see your ask and your bid price down here. Notice your ask price is higher than your bid price. So let's say you're buying something and you're buying a breakout. Now, if you put in a market order, you could get filled quite a far away. They have a certain number of times to get your fill in. If you buy ask, that means when you've got your bid over here, this is a lower price. Your ask over here, this is a little bit of a higher price. The difference between the two is called your spread. So if I hit buy ask, then I'm trying to get filled at the upper level. So if I'm buying something, I'm usually going to try to buy ask. If I'm selling something, I'm usually going to sell bid. That means I'm selling over here, buying over here. So it prevents me getting a lot of slippage inadvertently, and it means that if prices wiggle around there, then I'm going to get filled. Sometimes I will miss a trade because it will go too fast. The ask or bid prices will change too fast, not wiggle around as much. So I won't get a fill. But I don't get that massive slippage that I could get, especially when something that is thinner, like the micros can be so far. I've noticed that it's not as big of a deal on the micro ES and the micro NQ, but sometimes it can be. So It won't matter so much if you're trading the E-minis. You're not going to usually get too much slippage unless there's news or something or it's moving super fast. So if you're trying to do it, for example, let me go here to the chart again. If you're trying to do it at a point like here, and you're putting in a market order, you're going to get more slippage than you would if you were putting it down in here in the congestion, but you would still probably get filled at like the high. Um, so you want to be cautious of that, and that's the difference between the three. So if I'm selling on the bid. If I'm buying on the ask. If I have a stop order, I'm using a market if touched and realizing that I'm going to have some slippage. So sometimes I'll go and I'll manually manage a stop order instead because my stop orders are usually a little bit lower than where I ideally want to get out, but I still want the order on the books so that in case something does go really fast, news or something, or if I go down, then it's if my charting goes down or something, then I'm not going to get creamed on it. So we ended up doing some teaching here today versus looking too much at the overall market yet. But anyways, that's the difference there. Have I started trading the micro E-minis? Yeah, I started trading them on day one or day two because I wanted to get the feel for them. Um, I've been able to get up to 20 contracts and get filled really easily. So I think that they're going to be pretty good for you guys to work into. A nice thing about it is like on, so a point on the NQ is, or the micro NQ is $2. So if you've got a 10 point stop, you're only risking $20 a contract. So you can go into that with 3 contracts and only risk $60. So it's really a great level for you guys that are futures traders, that are especially trying to, build your confidence, work out patterns, especially if you're working at like tricky levels and such too. I do have an update, League of Trader folks. We are going to be, as of next month, we're going to be moving League of Traders from Tuesdays and Thursdays in the morning from 9 to 11 to 11 o'clock, Tuesday, Wednesday, and Thursday. So this is going to allow for folks that are really active in the morning to participate in League of Traders better. Allows me to do more of my trading in the morning too, and allows all of you guys to be able to focus a little bit better. So we will be doing morning reviews as we start into the sessions and looking at what's coming up in the afternoon as well. So I think it's going to be a much better fit for everybody. It kind of shifts from the schedule that Trade Thirsty had put in place, but it's been something a lot of people have been giving me feedback on in recent months. Also, if you miss a session, it's really tricky to catch up on 2 to 2.5 hours of reviewed videos. So it's going to be a lot easier with shorter sessions, but 3 days a week. So if you do miss a week, it's not, or miss a day, it's not as big of a deal. So I have been doing a poll over the last week from those that are in the morning. So we decided that 11 o'clock is the best time for everybody. Mentor Monday and Forward Focus are still going to be at noon. So those will still be at the exact same time. So basically there's just going to be a session every day of the week going forward. Correct. 11 o'clock Eastern, Tuesday, Wednesday, and Thursday. I was originally going to do it at noon, but we do have some West Coast folks. So still want to fit some of them in too. Exactly, Harvey. So hopefully that works best for everybody. Great chance for you to get an idea what we're looking at for the afternoon. Also, a chance to scan a lot more stocks as well, in addition to futures trades. So that is something we've got coming up. A little bit of a shift. Let's see here. Let's go take a look at our markets now. We have a really nice little two-wave pullback here that is just starting to take off in the markets. We are, here's the 20,000 tick chart. Notice how well these retracement extension levels are serving as retracement levels now in the market here too. Let's scroll this over. Shallow avalanche this morning, 1, 2, 3, then our shift. You guys have seen me draw this pattern a million times. We'll do it again for the new folks in the back. Actually, new folks should be in the front, right? So here's our avalanche. In this case, it's a lovely little head and shoulders. 1, 2, 3, 2B. You're going to find this series repeating over and over and over again in the markets. And then two-wave correction here. And this is what we're looking at as support right now. If we look at the time development, you'll notice we don't quite have measured time development between the upside and the correction. So we were actually, Nicole, you were actually asking about this morning, where we had the same thing happening on a smaller scale earlier. And the question was, hey, is this still a good Phoenix? And the answer to that is it's a zone where you can get an initial trigger, but you don't always get the strong follow through. It's more iffy. So especially when it gets up to about a 61.8% extension of this first impulse move, it can go into another base. It can pull back, then try to go again as kind of a tilted Phoenix. It can have go into like a 2T and trap and turn back around. So it's an iffier level to try to go, but it does happen. So if we go down to an even smaller time frame, you can see that here on the 200 tick chart. Here's that pullback, kind of messier two-way pullback. Same type of pattern though. And you can see it went up to about, 61.8% extension. Again, that's the key point. So this could have pulled back again at that point. And so it's a do or die level. So if you're in a trade, this is a zone that I will always protect part of the position. And if it goes and I can't add to the position as on a correction, I don't worry about it too much because I know that I don't want to fully give back a lot of the trade if it ends up holding that level, because that is a main level that can hold. So in this case, it did the two wave and then it shifted momentum. So this is basically that same pattern that we just saw on the downside. Goes into the Phoenix, 1, 2, 3, shifts to a higher high, and then gives you a pullback. It's the same pattern that we saw on the downside, just not as clean, not as pretty. So that's actually what we can see having the potential to try to do now with the current move. This can go into a 1, 2, 3, but it is at a key point. I'm going to put the extension on here. That this is a main level of resistance. I'm actually going from where the correction started versus the absolute high. So that's your 61.8% extension. So this is a really main level where what it does is it can treat this like a first wave of correction and then sometimes go into a second wave of correction. So it's a key point of resistance to watch for. It can go into 1, 2, 3, do a measured move, but it could also go into a larger correction, larger pullback. The pullback is more likely to happen if this move is the same momentum as this move up here, but not always. So one of the ways that it tricks people is sometimes it'll be faster than the initial impulse move, and they'll think, oh yes, this is going to give me a really strong surge because the momentum's actually picked up. And then they're shocked that it goes into a correction here. And it's because this is a two-wave correction with lower lows, 1 and 2, and the time development of the correction isn't longer on the pullback compared to the initial upside move. So when they're comparable or a little bit less, there's a greater chance that it will not break that 61.8 and can go into a longer correction. You can see it's struggling here at the 61.8% zone. So last time this morning it went. This time we don't know yet. You can see it is reacting though. On larger time frame, let's take a look what we've got going on in the market. So daily charts, what we looked at last week was we came into some smaller measured move support just based upon some of the smaller impulse waves that we had seen in the past, but we've also seen bigger moves, bigger impulse moves coming off of the larger corrections like this. So there's still room for this to try to push to the downside. It's all going to come down to smaller time frame momentum at this point. On the Dow, I'm actually watching to see if we can get a shallow avalanche, and that's the same thing on the S&P 500 here. So you can see it's pulled back, maybe not so much a shallow avalanche on the S&P 500, more so on the Dow, but go into more of a base here and then give an avalanche. It could even do it with a head and shoulders in there. So that's what I would like to see next to give us a higher probability setup, kind of the highest probability setup for a continuation on the downside. That'll come into about, let's see, let's put the fan on here. This is a little bit strong for a fan move, but I'd like to see it pull back over into here at least. And it could go a little bit past it just because of this being such a strong momentum move on the downside to start with. You can see it held the 61.8% fan first. So a base out over into 76.4 could help to get this going again. This momentum again really strong, so it's possible it could have a slower start if it goes with just a two-wave continuation. Now if it pops up, goes into an inverse head and shoulders, that can actually have a faster chance at a drop because it would help shift things a little bit longer over time. So NASDAQ at that do or die point, it basically struggled there and is pushing through it. So it is following the path this morning. Pay attention to the classes though, because I'll show you examples where it can't. So see, this is pushed through that 61.8%. So if you watch this over time, you're going to find that, I should actually do a statistical study to see how many of them actually will pull back at that point. But, just off of the top of my head, I think it's pretty close to about 50%. So you'll have to kind of pay attention to that over time. But you will notice many of them will stall here. And that surprises people. So this one didn't even pause to do a 1, 2, 3. It just kind of kept going. But I will still protect part of the trade at that position because of how often it will pull back. If you go down to smaller time frames, you can look for setups to add in. You can't see anything on the 1,000 tick charts, but a lot of times you could on like 100 tick or something smaller. Let's see here. 200. So the 200 tick actually does show you that it has a better chance of breaking because of the way it's correcting. See the shallower moves? Those of you that were in the Tilted Phoenix class a couple weeks ago will recognize this. If you're watching the momentum here, this is that 61.8% resistance that we were looking at. So if you drop down to the smaller time frames, you can see the momentum and how it's reacting. And if this was going to fail, you would usually see slower moves up, see some faster moves down. This actually had slower corrections. That's what's allowed this to do the tilted phoenix. And now you're hitting measured move resistance again here. I'll usually use the bigger time frames to give me a perspective on larger time frame movement, but then I'll drop down to the smaller time frames for timing. So the confirmation was right here when that broke out. Again, this is a more advanced strategy. So if it's totally confusing to you, don't worry about it. Just pay attention to the main concept that this is a do or die point for a larger correction here. Okay, so back to the larger time frames. 30-minute chart, looks like we could slip down to a lower low. I don't really want to see that happening to get a better avalanche because I would like to not see a trap. I guess it could still go to a lower low in the day on the daily on the ES and still hold the previous low. So with our two-way move on the downside here, what we'll usually see is this will go like this. It'll kind of shift like that. And that can go to a 2B on the 240-minute chart. So you've got your first drop, second drop, and you'll usually go for a third drop. So as long as it goes into a shift like that, that can bounce this back up again here. It could even go fast and then slower, so it shifts the momentum overall and then bounce. So on the NASDAQ, same thing. Basically want to see this bounce kind of play out like that. Go into another pullback and then look for some stronger buying opportunities on that pullback. Am I going to be running any Memorial Day specials? I did not have anything planned because we did so much on the for Mother's Day. If you've been with me, you guys, a long time, I'll still give you guys that Mother's Day special if you missed it. I know some of you missed it. Just message me. Let me know which one you want. Right now I'm focusing on a new class that I'm working on. It's going to be for newer traders, just getting started in futures trading, and it's going to be using the micro E-minis. And it's going to be something like if you have friends that are starting into trading, I mean, most of you guys are going to be past the level. Some of you aren't. I mean, if you're trading for less than a year, then you're not. But it starts from very basics, like the things that I was talking about with the bid and the ask and how to use those to enter your trades. It's going to cover stuff like that. So going into some of the core stuff that even those of you that have been trading for a year, maybe you've missed it and you don't, you missed some of that basic stuff. That's what the course focuses on. Because I've had so many people come in and they're like, oh my gosh, I can tell you know this so well, but at Zoom, it's way over my head. Like the patterns I'm talking about here today, it's just like, wow, I see it after you talk about it, but I cannot see it live. So I'm creating one that goes back to like the very basics, how I was teaching some classes like 10 years ago. So that's really good for folks that have been trading for, I would say 18 months or less. That's what that focus is going to be on. It goes right into like how to set up your charts, how to put your Fibonacci tools on your charts, how volume comes into play, just core basic stuff that you'll see me do in League of Traders, but League of Traders is more focused on, middle to intermediate to advanced traders is where most of the traders are at that are in League of Traders that don't get totally lost. So yeah, that's what I've got coming up. Yeah, so just Richard, my email, you guys, Toni, use Toni at tonyhansen.com to reach me directly. I will be doing Mentor Monday. Yes. So we will be meeting on Monday for Mentor Monday. The schedule for Mentor Monday is building um, building contract and share size, and basically trading like 3 contracts versus 5 using micros or E-minis if you're trading E-minis. And then the next week is adding into trades. So building into winning trades will be the week after that. Time changing on when LOT live is going to be will be starting in June. So we'll be switching over in June. All right, let's go look at some of the larger time frames on stuff here. I know we kind of had a little bit of a change in what I usually cover in forward focus here today. Let's go take a look at some of your guys' questions. So if you have something you want me to take a look at here, let me know. Post it in the questions box. And we will take a look at JNUG. So we are creeping in JNUG, our gold miners bull. Good level of support, but nothing really showing me a buy here. Okay, so on the daily chart, for a buy on this, you can see we've got a little bit of a two-wave move. This channel breaks to the upside. This is actually what I was talking about in League of Traders on Thursday, where I said, there's this kind of wonky pattern. It's not quite a momentum reversal because the difference between 1 and 2 is tighter than between 2 and 3. That's what this has the potential to do right here. So this has the potential to break up to the upside here on the daily time frame. I would use a 240-minute chart though. Help with timing on this. Well, here's 120-minute. You can use that too. So what you would have to see is a shift here where we've got the two-wave move to the downside. And this is probably going to go to a little two-wave here too. So it would need to trigger here for a channel break on the upside. That can actually pop quickly. That triggers. So watch that as we head into next week. For the bears, it means it's time to start to get really cautious because if this only goes to a two-wave move here, that's going to be that do or die point for that to try to pop. On bonds, Let me get that loaded here for you, Harvey. This seriously better be the last virus of the season, you guys. It's not nearly as bad as when my kid was a toddler entering daycare for the first time, but holy cow. I know I've used up my sick days for the year. I'll go ahead and let that load and we'll pull up Apple for you guys. It's, I don't know if it's just irony or if it's totally related, but I've been taking elderberry. One of my lovely doctor friends recommended taking elderberry every day during cold and flu season. And I started doing it after I had the flu, and I hadn't gotten sick again after that. And of course, I ran out a week ago. Within a couple of days, I had a cold. Coincidence? I don't know. So we are coming right off of that 100% extension zone with the two-wave move. Kind of got our two-wave up, longer base, two-wave up, momentum reversal. Big shift here. This has room to do a secondary drop here just because of the way the momentum is shifting in here. It's coming into a do or die point. Basically, the third test of low here on the 120-minute chart, that's going to be the do or die zone. So right now, it's actually looking pretty bearish. If it breaks this lower channel here, that can go for a second wave really easily back down into that previous low. So do or die point as we head into next week on Apple. It is a wipeout zone. I think we're probably around a 38.2% retracement here. Yep, or 50%. We already made it to 50%. Add the fan here, and you'll notice that 61.8% fan is going to line up with that do or die point too. Weekly chart definitely can do that secondary wave here on the downside. Bonds. Whoops. I haven't traded bonds much this last month. No particular reason, I just wasn't paying attention here. Let's see, daily, I don't really see anything here on the daily. Let's go back to the weekly again. Okay, monthly, clearer picture on the monthly chart. So monthly chart looks like we're going to be going up into a 2T, given the way things are reacting right now. That's the most probable setup. So this can pull up even further here before it goes into that move. So this can treat this like a 2-wave up, can come up into that level and then correct, go into a 2T and reverse. That's what our monthly chart is looking like at this point. So I would be looking mostly on the upside, even though momentum is still really extreme here. Intraday, this could even go to a 2T intraday here on the 240-minute chart because we've got a 1, 2, 3, and that can go and retest the high and probably go into a little bit longer correction. But again, that larger time frame is still looking more bullish. So be really, really cautious on reversals. And that's what the tick charts are showing too. Reversals would be pretty scalpish on intraday charts only. Bitcoin. Oh, sorry about that. Like I said, yell at me if I mute myself. I don't want to cough on you guys. So we are coming off of a little phoenix here. 1, 2, 3. This is a zone things can start to whip around a bit more. We've got measured move levels. This is actually not unusual when you have, you see this a lot even in like pump and dump stocks where, like I said, I wish this chart went back further. Let me see, I'm gonna just pull this up on trading views. I'll show it to you over there. Come on. Oh, let's see, I haven't used trading views here for a while. I don't know how they have it labeled. Okay. Try it this way. There we go. Okay, so monthly chart here. Here we go. So we talked about this months and months ago when Bitcoin was first doing this crazy run. So what happens in charts like this, where they kind of come out of nowhere, they do this kind of top thing, they come back down. Often 76.4% retracement is pretty normal. Then they'll have secondary moves like this. And over time, they usually look like this. And they can go and go back up again, but they kind of slowly go down with these pops like that. And so what's happening here is basically what we talked about over the last year every time we talked about Bitcoin. And it happens, and you'll see it in, for example, like Weight Watchers and like fad stocks where, hey, something new's come out, we're really so excited, weight loss drug, etc. pops up, crashes, you get the minor pop. Sometimes they'll even develop into moves that will surpass the first initial crazy move. Happened all the time back in the 90s with the internet, tech stocks, and things like that. And then they just kind of faded out into oblivion. Don't think that's probably going to happen with Bitcoin, but that's the typical way that these things move. So this current rally like this doesn't mean it's necessarily going to be sustainable. If it follows in the path of what we usually see this type of thing happening, it's more likely that it's going to go to, hold a lower high and then creep down into a lower low again before it tries to turn back around. So be really careful with things like this. They offer great opportunities for day traders and even swing traders, not usually great opportunities for long-term investors. So it just depends on the type of trader you are, how you focus on these. So day trades, swing trade, for example, this is forming something looks like you're going to get another little pop, go into a slightly higher high. Kind of a do or die point here for that. You can trade these though, like the two of corrections. You'll see the pullback. Usually that'll be fan support. You can see the pretty little 2T here on the 4-hour chart. I mean, this was actually perfect 2T. Textbook example of it here. 2T into avalanche, Phoenix. So you can see if you're trading this on certain time frames, you get great trades. It's just not something that longer term investment wise is usually a great idea. And then a lot of traders will only have it come back into focus after it's already had this big, huge run. Let's see, Starbucks. Weekly on Starbucks is starting to roll. I usually look at larger time frames, then drill down to smaller time frames. So this was too fast for a normal bull flag, just because of the size of the correction compared to the upside move. So it's not uncommon. This might only do measured move here and then try to do a little bit of a bigger correction. Let's squish this. Up more here. So corrections off of highs like this, even if they start fast, a lot of times they tend to retrace back up. So they'll get off to a slower overall start, won't usually pull back with the same momentum as the rally. So even when it does end up holding this absolute pivot high, a lot of times it starts like this and then goes into a faster correction. So be prepared that this can chop around more at this level, but it is a really good level of resistance. Sometimes this will even go and do like a 2T or a momentum reversal. But usually with the way this is forming right now, where it's already kind of shifting a little bit, tells me it's probably going to pull back faster in the short term, but then can be choppier so that the correction ends up being a little bit longer in the long term. Boeing, good example of this. Well, not on the monthly, but on the weekly. So see how it has a rapid price correction to start with, thanks to earnings, or no, not earnings, the lovely crashes. So it has that first start, then it goes into a longer base. So the overall channel on the correction ends up being like this, even though it has shorter little bursts of selling. So that's something that it could be comparable to what we'll see happening on Starbucks. What one was I thinking of? The other one that we were watching? Google. That was it. Google was the one that was earnings. Bull trap. So overall starts out really fast, but then momentum's shifting as it's coming down. Let's see. I can take a couple more questions if you guys have something else you want me to look at fast. Anthony, slides. Send me an email. I will put my email address in here. I'll look up what I've got for you. Harvey, NQ. Okay, let's say that NQ, 1,000 tick, didn't get to its measured move on the most recent move up. So here, how do you manage the rest of the position to get out of it using a 100 tick chart? This is actually a big problem. So you'll notice here, 100% move right here. It doesn't hit it. Instead, it goes into a two-way correction. So this causes lots of panic if you've got your target order on the books at that 100% extension. So what you'll be thinking of is, hey, momentum faster, should hit that 100%. This is actually the concern that we were having at that 61.8%. Usually this happens at the 61.8%. So this is kind of doing like that middle zone where it didn't quite turn at the 61.8%, but it didn't make it to do the 1, 2, 3 on a bigger scale where you could see that on the 1,000 tick chart. So this went down to where I was actually showing you on the 200 tick, looking at this move and comparing it to the move here. Let me see how close that came. So that one didn't even quite make it to the 100% either. But what this would have told me is, compared to this first initial move up, the continuation move here is slower. So generally speaking, what I'm going to be doing is I'm going to be looking for that 76.4% to exit part of the position. if not all of the position, but really most of the position at that point, and then watching two-wave corrections. If things are still slower, I'll usually exit more of the position and realize, you know what, I might have to hold for a two-wave correction on bigger time frame if I want to try to get to a larger target level. So instead of relying on that 1,000 tick 100% move, I'm dropping down and I'm looking at the measured move on the smaller time frame. So usually my exit order on the books is going to be shy of that 100%. So 100% is basically 47.75. So you might put it like a point under. Let's say you put it here and you still don't get filled. So maybe you didn't take anything off at that 76.4. Again, the momentum is slower. So generally speaking, I'm going to take something off there because it's slower. But let's say you don't. Maybe you went to make lunch and left your order on the books just shy of 100%. You don't get filled. So you have to wait for the two-wave pullback. Then when it tries again, I will exit as it's pushing higher. So that time, your order's probably going to get filled. If you have it right under that 100%, you're probably going to get filled. If you don't, it pulls back really sharp like this. That bounce, use the bounce to protect part of your position because you're probably going to get a secondary pullback. And even if it doesn't, even if it shifts, manages to make it up to that higher high, the advanced trade management tells you you still need to be protecting part of the position because things are shifting overall. And then let's say it does do that, then I'm going to use a measured move here to get out of that trade instead. So same thing over here. Let's say you held through that two-wave correction. Maybe you just had your order on the books, didn't get filled. And so you hold through the two-wave correction. Now when it does the two-wave move up, then use that to get out of your exit. So really good question there, and it basically has to come down to going into the micromanaging it because it's now at above that 76.4% extension zone. So when something gets to the 76.4%, that's when I'll go into more of micromanagement territory where when it hits that 76.4, I'm dropping down to the smaller time frames to manage it on the smaller time frame. And again, usually I have an order on the books ahead of that 100%. And it usually is a limit order. Sometimes I'll use a market if touched, just depending upon the momentum. So if the momentum is slower, I'll be more prone to using a market if touched order. If the momentum is fast, I'll usually use a limit order. If it is so the question is, am I getting out of anything at 76.4 if the momentum is as strong or stronger? No, only if it's slower. Or if it's a measured move on a smaller time frame. I should say that too, because if it is a measured move on a smaller time frame, then I will still protect some at 76.4. But I'll know it won't be as much. So like maybe, let's say you've got 5 contracts, you would take off 1 or 2. Because overall, I would still expect it to go to that 100%. So I might even take off, let's say if I take off 2, then I'm going to add back in on a little correction. So I do add back in even if it's at the 76.4% zone. If I get a little two-wave correction, if I took something off at 76.4, I get a little two-wave correction. I'm adding back in if this momentum is as strong or stronger than the original impulse move, because then I know it's still going to get to that 100%, but I'll still play around with the position as it's working in the direction of the trade. Again, more advanced management stuff there. But you will get there in time. I probably need to do a boot camp at some point that is totally for advanced traders. Usually when folks get to that level, I'm working with them one-on-one. but it would be good for like a small group class, advanced traders. Again, this is what we will be covering in Mentor Monday in 2 weeks. This, what you just talked about or just asked about, and what I just talked about. That is our topic in League of Traders 2 weeks from now. All right, you guys are very welcome and thank you. Hopefully, I will be feeling better here shortly. Better than Tuesday, that's for sure. Tuesday and Wednesday were awful. Thank you so much, everyone. I will see you folks all next week. I will get you this forward focus here posted by the end of the day. And then I'm going to be playing catch up. I still got to get the Vegas class out to you from last week. You are very welcome. Everyone have a wonderful weekend, and I will see you back here next week.